The very first turtle soup after. Boy, did I just give you some fucking sauce. Boy, did I just give you some fucking sauce. I hope you're fucking listening, boy. There's just a lot of things that are telling me Price should go ahead and continue higher. Because I went to his channel, there was only one fucking video. Alright, so I'm about to spill some more fucking sauce, so I hope you're listening. I hope you're listening. Please try to keep up, my nigga. Alright, so I'm going to try to put this as simply as possible. I just tried recording this video and I realized it felt like I was just speaking some foreign bullshit language. But I'm going to try to teach you guys in one video as efficiently as possible what the fuck I look for when I'm taking my trades and how I catch trades like this, how you can replicate this, and how I do this. And I'm going to try to make it as simple as possible. I just tried to record this and I got 18 minutes in and it just felt like I was speaking bullshit. So please try to stay with me. If you have any questions, follow me. The best place to communicate with me is on X. I tend to reply to every message on there, but you can drop a message in the comments. I'll try to reply to them here as well. I just don't see all the YouTube comments, but on X, I see literally every notification. So my X is in the description. Shoot me a message over there. I'll answer everything as best I can. Again, try to stay with me. I tried to do this once already and it felt like I was just speaking bullshit. But I'm going to try to teach you how you can catch trades like this. This was a $530 trade in about 40 minutes. And yeah, I fucking catch trades like this all the time. No bullshit. You can do it too. So let's get into it. Fuck. Now I want to start the video off by saying, like, who the fuck am I and why the fuck you should listen to me and who this video is for. So this video is probably not for like the absolute beginner, but it's for the people who already have some. I feel like my fucking lips are chapped. Give me a moment. I'm gonna put some Vaseline on my lips. Vaseline? Need some fucking Vaseline. My lips ashy as fuck. Alright, that's much better. So who the fuck am I and why the fuck you should listen to me? My name is Caleb. I've been a day trader for fucking the last 4 years now. I started day trading. What the fuck ever. Day trading, scalping, whatever the fuck you want to call it. I've never really held long-term positions, but I do the day trading shits and I'm nice with it or whatever. So you should fucking listen to me because you could probably learn something. So who's this video for? This video is not for the absolute beginners. This is not for the people who have absolutely no introduction to anything market related. You should probably go watch some other videos on my channel or like other videos on someone else's channel and dip your toe in a little bit more. But this video is for the people with a little bit of experience already, and especially those people who are probably like, you know, a year into ICT concepts, or those people who are familiar with ICT concepts, because that's what I trade. I trade ICT concepts and I blend that in with time. I guess you can call it quarterly theory as well. I've never really watched any of Trader Day's like videos because I went to his channel and there was only one fucking video and it wasn't the most explanatory, but like the things that were in that video I felt like I already knew, but they were put pretty simply in that video. It was a like summary and I could agree with a lot of the points he made in the video, but there wasn't much that I got from that video that was on his YouTube channel. But over on X, there is a community that's built around quarterly theory, and I guess that is a theory popularized by Day himself. So we'll say I trade ICT concepts along with quarterly theory, which is popularized by Trader Day. It's all built on ICT concepts though. So here we go. This is for the people that are familiar with what the fuck I just said. If you're not familiar with it, get the fuck out of here, please, because you're not going to understand it. And you're probably going to just dislike the shit and what I'm saying just won't make sense to you. But if you feel like you can understand it and you feel like you can keep up, please continue watching because I'm going to teach you exactly what the fuck I'm looking for so you can trade like this and trade pretty efficiently so we can get the hell on with what the fuck we really want to do, because I'm sure we all don't want to just, you know, sit at the screen all the time. Trading it can be cool, but there's a certain lifestyle we're all trying to chase. So I'm just going to share what I know so we can all get there a little bit quicker, because that's what, you know, community should be about, sharing ideas so we all can grow. So I'm going to share what I know so you guys can grow, and then maybe someone can expand on this and teach me something that maybe I'm not seeing. All right, so let's get into the video. Finally. Whew. Now, there are a few things I want to talk about beforehand. First thing we're going to do is we're going to turn off one. We're going to go over two things. I took this trade and I took this trade on NQ as well. This was the first trade. As you can see, I got stopped out there and then price immediately reverses and I re-entered on MNQ and I was able to make my loss back as well as finish the day in profit on my fucking My Funded Futures. What the fuck is it? My Funded Futures eval account, right? So I've been trading it 2 days. We're at 52,154. So total profit I've made 2154. So what? I need 900 more bucks, 850 more bucks. If I have, 4 more $200 days throughout the week, I'll pass it by the end of the week. Pretty simple. So there's going to be a few times when you can actually trade that are going to be way more efficient than any time else throughout the day. And you have to know when these times are, and this only comes by way of experience. So in my experience, the Sunday open can provide opportunity for you to get a decent trade, to get a good amount of points. The Sunday open. Throughout the other Asian session opens in the week, it can be iffy, but the Sunday session, in my experience, proves to be all right. You can find some opportunity in the Sunday session. I'm knowing that, so I come into the Sunday session anticipating a setup to form at some point. Okay? Now, when I'm looking at the charts, when I'm looking at it, when is a setup going to form, there's going to be other reference points and times that I'm looking at as well. Now, whenever I'm looking to trade, I'm always looking to frame my trades around Q2 or Q3 of whatever session it is that I'm trading. Okay? I always expect the most efficient delivery to come in Q2 and Q3. So I only want to be looking for trades that come within this time frame. Towards the end of Q1, I can begin to look for a trade. And if we come back over here to NQ and I took my loss, as you can see, I took my trade closer to the end of Q1, got stopped out right at the beginning of Q2, and then the trade went ahead and pushed in my favor, right? So imagine had I just waited for Q2 to start, the stop out to have happened, and then I would have entered, right? I would have never taken the loss to begin with, and I would have been able to secure my profits. But besides the point, I'm looking to frame my trades around Q2 and Q3. Towards the end of Q1, you run some risks. So whatever session I'm trading, I'm always looking to frame my trades around Q2 and Q3. Now these are 90-minute cycles, okay? I gotta turn this AC off because it's a lot of shit. All right, the AC is just gonna be loud as fuck. It'll turn off in a moment. It doesn't turn off whenever I just turn it off. I don't know, shit's weird as fuck. But it'll turn off in a moment. So back to what I was saying. I'm looking to frame my trades around Q2 and Q3 of whatever session I'm trading. So if I'm trading the Asian session, which is going to be the first quarter of the day, I'm trading the first quarter of the day, which is the Asia session. I'm going to be looking to frame my trade around Q2 and Q3 of the Asia session. God damn, that shit is hard for me to say sometimes. So Sunday open happens. What happens on the very first candle of the Sunday open? We gap up, price trades lower to fill the gap. Okay, this is what the 5 minute looked like at the time, right? We gapped up. So the first thing that shows up on my chart is this new week opening gap. I want you to know I had an understanding of all these concepts before I added indicators to the chart. The indicators just made it way more efficient for me to see. So here are the indicators that I have. I've got a standard deviation indicator that's not shown right now. I've got a midnight opening range indicator. I've got a new week opening day, new week opening gap indicator, and I've got a 90-minute cycle indicator. Okay? So again, the 90-minute cycle will show you what quarters of the day. This first quarter is the first 90 minutes. This is 90 minutes. This is 90 minutes. This fourth quarter that just opened up is going to be another 90 minutes. Okay? And after all these quarters close, that'll be the end of the first quarter of the daily range. So anyway, back to what I was saying beforehand. When we come into Sunday, we gap up and price trades lower to fill this gap. When we gap up, the first thing that our eyes are drawn to is the gap that's created, which is right here, right? That's what's highlighted. That's what that yellow box is. That's the new week opening gap. Price trades back into 50% of that gap, and then we trade lower to take out sell side right here. Boom, this is sell side liquidity. Now, two things. I'm looking at this low that just got taken out, and I'm looking at this up close candle. because if price is going to continue lower, this up close candle should be a bearish order block. Now again, this is the 5 minute time frame. So if I'm expecting this to be a bearish order block on the 5 minute time frame, I'm obviously expecting it to hold. When I see price trade back into there, I want to see price continue lower. Okay? As we can see, that does not happen here. Now we're going to drop down to the lower time frame real quick, go down to the 1 minute. And again, this is that 5 minute order block. And this right here is that sell side liquidity that was taken out. So when we take sell side liquidity out, we trade back into the 5 minute order block and we trade lower. So that's what we would want to see. Now, if price is going to continue down on this leg, I don't want to see 50% of this leg be violated. So if we pull up a fib, we can clearly see 50% of that leg gets violated. Okay, because 50% of this leg gets violated and price fails to trade lower here, we can now begin looking at bullish scenarios. Okay, now why would we look at a bullish scenario? Because 50% of this leg gets violated, we have reaccumulation here, and price fails to trade lower. This is a failed swing low, right? So at this point, this becomes an intermediate term low at the very least. We don't know if it's going to be a long-term low yet, but at the very least, this becomes an intermediate term low. We have a short-term low here, right? Short-term low taken out right here, and then another short-term low here. Short-term low, intermediate term low. Price rallies higher. Now, when I see this is plenty of confirmation for me to say, okay, if price is going to continue higher, I expect us to come take out this high, right? So price trades higher. I'm waiting for a pullback. We get this pullback. Now there's one thing I want to highlight. At this point, when price trades higher, I'm looking at this very lowest swing low, and I'm taking a fib and I'm projecting that out. Fuck, I forget to do this. All right, as soon as this becomes an intermediate term low, it's just something you got to train your mind to do. It's something I've trained my mind to do. As soon as this becomes an intermediate term low, I want to be looking at this as two things. Does 50% hold? If not, I'm drawing a projection to see where price can go. If it does hold, then I'm looking for price to continue lower. As we can see, 50% did not hold. We got reaccumulation here. Failed swing low. Where does this swing low happen? Within OTE, right? And then price rallies. Price rallies, negative 0.5 standard deviations away, and then we get a pullback. We also happen to have this little 1 minute fair value gap, but I'm not as concerned with this and looking at this as where I can enter short. I'm not looking at this as a spot to enter short. Now, why am I not looking at it as a spot to enter short? Because we just had a market structure shift down here. If we were going to continue lower, I would have wanted to see us, at the very minimum, not trade back up to here. This is probably about 50% of this leg right here, and that would be, again, above that 5 minute order block. We would have tapped into that order block and we would have traded lower. That didn't happen. We traded higher, so I'm not looking for a short entry up here, right? Price pulls back. Again, we hold just above 50% of this lowest swing low, right? Or lowest swing leg, whatever the fuck you want to call it. We get a one candle close in the direction, and as you can see right here, I enter on the very next candle. I entered closer to the end of the candle when it was about up here, right? So I was in about up here. Price rallied up. Again, I wanted to see us go ahead and take out this swing high. We get fucking one tick away from it. I should have just closed the trade, especially when I see us inverse this gap. I could have just closed the trade right there and taken my little bit of a win, but I didn't do that. And sometimes this happens, and either you deal with it, you deal with the loss, or you cut the bitch for pennies. And oftentimes I just don't want to cut the bitch for pennies, so I end up taking a loss. Now I could have had my stop above break even at this point because we did take out this internal swing high, but I just don't do that. It's not something I do often. At this point, when we took out this internal swing low down here, that was where I had my stop at, right? So as we can see, we take out that internal swing low. That's exactly where my stop was at, and then price rallied, right? Which at that point, I had already moved over to M and Q because I'm thinking, all right, if price is going to, because I'm still watching at this point. Why am I watching? The second quarter just opened up, all right? So I'm looking at the opening price of this second quarter. Again, we're keeping an eye on the 5 minute time frame. Most of the time we're looking at the 5 minute time frame. We're only dropping down on the 1 minute when we're looking at an entry. And I look at it when I'm managing my trade, but I've developed the skill set to be able to do that. If you're new, you're not going to be able to do that and manage your emotions intelligently. And that's all it is emotional management. If you can manage your emotions on the lower time frame, then fucking knock yourself out. But if you can't, just continue to watch the higher time frames, only enter on the lower time frames, and then jump back up to the higher time frames to continue watching your trade. And then only close when the higher time frame invalidates. So at that point, when we get stopped out over here, again, we're going to go back over here to the 1 minute. When we get stopped out over here, we're still looking to see, all right, where is price respecting? Do we go for this low? No, we didn't go for this low at all. Price stopped anyone who had a stop loss out here. And then we inverse this gap. And then as we're inversing this gap, we put in another fair value gap right here. As we're breaking this high, or these equal highs right here, relative equal highs, whatever the fuck, right? So again, I'm continuing to watch price here. I see this gap as we're breaking these highs. I'm looking at this and anticipating us not to trade here because it's a gap that's put in as we're breaking these highs. So I'm expecting this to be a breakaway gap. I do not want to see price trade back to here if we're really bullish. Why do I not want to see price trade back to here? Well, because we've already taken out sell side liquidity right here. We've already taken out sell side liquidity. Here's the opening price of the new quarter. We've already traded below the new quarter. Now we've traded above these highs. I want to see us continue to put in higher highs at this point. So our next area where we're looking to target would be these now equal highs. So I want to see this be the next target. I don't want to see us come take sell side again. We already did that right here. Simple enough, right? We already took sell side, so we should not have to take sell side again. The next target should be buy side liquidity. So we take internal buy side liquidity right here. We flip it, little action right here. And then we continue to take these internal highs. Now again, price opened up Sunday right up here, which as you'll see over here on MNQ, this was pretty much our first target. Boom. It was our first target. Price opened up, that's where we wanted to target. We wanted to target back to the open, right? So what do we know price is doing? Well, if you have knowledge of how this shit works, then you would know there's the open, low, high, and close. Now this is happening on every time frame, every fucking candle. You just have to know what that's going to look like on a higher time frame and how that's going to look on the corresponding lower time frame, right? So if we look over here for the 1 hour, we can see we have this new week opening gap. Price opened up, we traded lower, and then we were going to look for highs, right? As we can see right here, we opened up, traded lower, and then boom, price flips. Now we're looking for highs. We take out internal buy side right here. Then we take out sell side. Internal buy side. Internal sell side. Fuck. Internal sell side. We take out internal sell side. We do not take out external sell side. Price then takes out internal buy side again. Now we want to see it take external buy side, which we did right here. That's where we trimmed our first position. Now, how did I get these entries right here? How did I know to enter right here? So over here, this is our 5 minute. Again, we were already bullish because of everything we explained. Over here, where we at? Here we are, right? So we're bullish because, again, this lowest swing leg right here, this lowest swing leg right here, we're anticipating this to be the lowest point. We don't know if it's going to be the lowest point, but ideally, if we're expecting this to be the lowest point, this is where we want to have our stop loss. The reason I got stopped out right here on NQ is because price had already moved in my favor. So we already took internal buy side right here. And again, we took buy side right here as well, right? We tapped right into there, and then we had this little inverse fair value gap, which can be enough to trigger a market structure shift, which if you're looking at this low when we close under here, could be a market structure shift. But this, again, just happens to be a failed market structure shift, right? This could be enough to go ahead and send us lower. But in this case, it just wasn't. So if we're anticipating this to be the lowest swing low, this to be the lowest low, this is the leg that we're projecting out. Again, look, where's price respecting for the most part? Above 50% of the range. Right here, you can see price closes right where? Right at the top of OTE. We get an inverse fair value gap. We break above these internal highs right here. We flip it right here. This is turtle soup, which as you can see, this is where I started building my position. On this turtle soup right here, the very first one I could identify after the stop out occurred, after OTE occurred. The very first turtle soup after OTE. Boy, did I just give you some fucking sauce. Boy, did I just give you some fucking sauce. I hope you're fucking listening, boy. So, did we take out this low right here? No, but we don't have to because we already took out sell side right here. Let's look at NQ. Did NQ take out this low? Now look, mind you, this whole time, I'm not very much paying attention to ES. The only thing I'm noting on ES, because I have ES right here on my second screen. I have a second screen right here where I keep ES, but this whole main time I'm looking at NQ. The only thing I'm noting on ES is still under the midnight opening price, but NQ is well above the midnight opening price. So I'm looking at ES as if we're going to trade higher, I want to see ES go ahead and take out the midnight opening price. Is there room to do that? Can ES trade up to there? If ES can trade up to there, then I'm going to remain bullish, because we should see ES as well go ahead and take out the midnight opening price. So there's just a lot of things that are telling me price should go ahead and continue higher. We turtle soup right here. Boom. Green, baby. Enter that bitch. Enter that bitch. Target the internal highs for first take profit. But if you know what you're doing, you can squeeze a lot more out of the trade. So as you can see right here, where are we looking to frame our trades? Around Q2. I'm looking for Q2 to expand most times, Q3 to either retrace and then continue expansion. All right, so I'm about to spill some more fucking sauce, so I hope you're listening. Please try to keep up, my nigga. So in Q2, we're looking for expansion. And if Q2 expands, we're looking for either a retracement in Q3 that sets up for a continuation in Q4. We're looking for continuation in Q3, or we're looking for a reversal in Q3. Now, if Q2 doesn't do shit but accumulate, then I'm looking for Q3 to expand, and then Q4 to either continue, reverse, or retrace. Makes sense? Makes sense. So a lot of our trades we're framing around Q2 and Q3, because this is where we're expecting price to either expand, retrace, or reverse. We're here on the Sunday session. This shit is hard for me to say. We're here on the Sunday session, and price hasn't done shit. Okay? So boom, right here, this is accumulation. All of this is just price accumulating. It's a new week. Price hasn't done jack diddly shit, my boy. We haven't done shit. So we can already throw out retrace and reverse out the fucking window. We can throw that shit out the window. Why can we throw it out the window? Because price hasn't done shit. Right here, we've accumulated. So the next thing we want to see price do is expand. So boom. Are we on MNQ? Yeah, we're on MNQ. Boom. Right here, we turtle soup. As price is flipping this, that's when I'm entering. I'm usually entering once price has already flipped the 1 minute candle. And sometimes that shit can be spooky, because the next candle might open up and go ahead and fucking drop your ass. It happens, my nigga. It happens. This shit trading. Manage risk, my nigga. So I like to enter towards the end of the candle when we're closer to the close, because we've already, like, look, this shit was down here. If we continue dropping on the next candle, boy, I'm gonna feel like a fucking dumbass for buying down here. But if we buy up here and price continues, which it does a lot of times, more often than not, then I'm gonna feel like a fucking genius, because I'm gonna be putting bread in my pocket. So price flips, I'm taking my entries. Boom, boom, we in 6 micro contracts. Okay, why 6? Because I took a loss on NQ on my first trade, so I'm already down. But I know if I get a good trade, I can make it back with half of what I risked the first time. So I risk a little bit more than half. 6 contracts, that's more than 5 micros. So be it. Shoot me. Price continues. Boom. We take the low of this candle, turtle soup again. Boom. On the next candle, take the low, up. So I'm expecting, all right, we might go ahead and take out this high. I threw in a couple more contracts. I think I threw in 3 more contracts. So we were in, I threw in 3 more contracts right there. We were in 9 contracts. Our average contract price was probably about right here. I want to say our average contract price was probably about right there. I'm going to delete that because it's not really important. But as you can see, where our add-on was still right around our average contract price. Okay, so the first turtle soup, after we've already had this market structure shift down here, after we've already traded back into OTE, the very first turtle soup, that's where I entered. First target is this internal buy side liquidity, but I'm expecting us to go ahead and take out the opening price of the day. So that's where my first buy side target was. Price goes ahead, expands. We get that expansion that I'm looking for in Q2 expansion, right to the opening price. Boom. That's where I take off 10 contracts. I took off 60% of the position. Right here, I added 6 more contracts because I was expecting us to go ahead and expand towards this. Again, I'm willing to put on that risk because I know what I'm looking for, right? So I'm in for 15 micros at this point. Average price is right here. I'm perfectly fine with that. We got this fucking beautiful ass fucking breaker block right here that should hold, if anything, right? So we could put our stop down below this breaker block, and hey, if we take that loss, we just take that loss. But at this point, we shouldn't be coming back into this breaker block, right? We've taken sell side, we've closed above the high, turtle soup. That's, you know, taking internal sell side right there. We should be taking internal buy side to external buy side now. Expands just above the open. That's where I take off 60% of the position. Boom, price retraces a little bit. We trade back into it. We get these little bearish candles, and it spooks me out my position. I take off, you know, 4 more contracts. That's okay. At that point, I had already locked in $300 on the day profit. That's despite being down $180 right here on this trade, on the first trade I got stopped out on. Despite that, right? At this point, I locked in $300 profit. I had 1 more contract. I let it run, and right here at this high, what the fuck made me sell at this high? Well, we were above -3 standard deviations. It's getting close to Q3, and again, we're looking for Q2 to expand and then Q3 to either retrace, reverse, or to continue. In this case, we got the Q3 continuation, but I just don't know if we're going to retrace or reverse. And I was up another $50 on that contract, and that's really all I was looking at. I was like, I'm in 1 micro, I'm up $50. I'll go ahead and take it in my pocket. I'm not going to get too euphoric. I already caught what I was trying to catch, which in this case was Q2 expansion, right? And you have to understand, how do I know to look for Q2 to expand, Q3 to either retrace, reverse, or have a continuation move? I've seen it over and over again. Again, here are the indicators. You can zoom in, you can look at that shit. I'm not going to go into it. I think I already went into it, but you can look at, I'm going to make it very easy for you to see. Boom. There are the indicators up there. There's the indicators right there. You can fucking go put the indicators on your chart. Specifically this 90-minute cycle one. Now, I do have custom settings for the 90-minute cycle one. I'm not going to fucking show you my settings right now. I don't want to give you too much sauce. If you want that much sauce, you're going to have to subscribe and comment for that. I'm not going to lie to you, my boy. That's just going to have to be the tax. But, because I don't mind sharing the information, but I'll be damned if I just give everything out for free in video one. Not everything in this life is free, my boy. And it could be free. All you got to do is comment. I don't want your money. I can make plenty of off this trading shit. So look, right here. You have to understand. If we're looking for expansion in Q2, what are we going to be looking for? Open, low, high, close. I'm going to pull back this projection just to right here, right? So this is the open of Q2, also known as the true open. The open of every second quarter is the true open. Okay, the quarter of every, or the open of every second quarter is the true open. Okay, so this would be the true Asia open. We get an open. Look, very clean, open. We set in this first low. We set first thing. All right, the first thing we do on the opening candle, we go set buy side to be taken out later, and we set sell side to be taken out later. Okay, so we open, fake move. This is just generating liquidity on both sides of the marketplace. Boom, we trade above this buy side liquidity. We use that as fuel to go lower. We take out sell side liquidity here and here. Boom, internal sell side, external sell side right there. On the higher time frame, this is still internal sell side, but if we're only looking at this right here, this happens to be our external. So you can catch a trade if you're fucking blind and only looking at this structure right here. But still, on our higher market structure, where we trading into OTE, and then boom, now we're going to take buy side. We've taken plenty of sell side out the market. Now we can expand towards buy side liquidity. Okay, so if we're looking for expansion in Q2, what are we looking for? Open, low, high. We trade to the high. As you can see, I'm selling right there near the high. Why am I, how do I know to sell near the high? Because time. As we're approaching the end of Q2, I'm thinking, okay, Q3 might retrace or reverse on us, and I don't want to give back my profits. So I'm looking to start selling right here on the high. I think what happened was right here, we put in the high, we sold off a little bit, and I was like, boom, when we get back above, I'm gonna sell above. I think that's what happened. I may have just, boom, said, fuck it, I'm gonna sell at the high. Boom, we sell right here at this, we'll call it pretty much the high of Q2. And then boom, we had a little bit of a retracement, and then Q3 continuation, right? So again, what are we looking for? We're only looking to catch a trade between Q2 and Q3. And for me right now, I'm still new to this. But what I'm doing is I'm focusing on one quarter, and that's either Q2 or Q3, whichever one my setup just so happens to appear in, whichever one I can read the market. If I can read the market like this, everything that went into this, then I know good and goddamn well the probability that all the bullshit that I just spilled is likely to follow through. Why is it likely to follow through? That's just how it is, bro. Like, when you study this shit, you'll see that's just how it is. And my nigga, you either get on board or you don't. I just explained this shit. Now, again, we're also paying attention over here to the higher time frame. What's going on the 1 hour? What does the 1 hour look like? We're trading these 3 candles. Like, I didn't even focus on these 2 candles. This was right here. As you can see, look at the corresponding candle on the main chart of this candle. This is the beginning of Q3. So at this point, I was already out. I'm focusing on 1, 2, 3. 1, 2, 3. Boom, boom, boom. Those were the only candles I was focused on. Right? So we opened low, high. Right? Price is still seeking higher prices. Over here, we've got this midnight opening price. Open, low, low. We're still trading higher. Right? This still can be considered one day. We haven't started a new midnight cycle yet. So this is still one day. This is still open, low, high. We're still trading higher. I'm still bullish. There's been no market structure shift that tells me price is going to seek lower prices at this point. So where are we likely to expand on our lower time frames? Higher. So I'm looking for that expansion up. So when we get all this generated sell side taken out and we're moving away already, right? We're moving away already. I don't even have to look for fucking SMT most of the time. It can be helpful. It can be helpful. Let's see if it's here. Yeah, see, it's not even here. Let's see if it's here with the Dow. Yeah, there's no SMT here. See, sometimes there's going to be SMT, sometimes there's not going to be SMT. But when there is SMT among multiple quarters, that can lead to some pretty powerful trades as well. But if that's all you're looking for, you're going to miss some trades. So sometimes I'm looking for SMT, sometimes I'm not. This particular trade, I'm not. I'm just looking for price to go ahead and expand. It's the open of the week. Nothing's fucking happened except for this accumulation right here, right? Boom, accumulation. Now we get this bullish ass breaker block get put in. We got this little order block right here. Now I'm doing a lot of analysis right here on the 1 minute time frame, but again, if we're looking at the 5 minute, you'll see a lot of this is corresponding. So let's delete some of this. Now we're looking at all the lower time frames. Remind you, this is all stuff that you train your mind after a certain time practicing this day in and day out, looking for this particular scenario to happen. Q2, open, low, high, close, or open, high, low, close. You'll start to see the setups form, and you'll start to understand where they're going to form, right? So again, Q2 opens. We take out sell side liquidity. Price starts to trade higher. If price is going to trade higher, that means we're going to trade above this down close candle right here. If we're going to trade above this down close candle right here, that means this is going to become an order block in the future, right? Price trades above. We close right here, right? Price closes right here. What does this next candle do? Open, low. We trade back down into this fucking order block right here. High, close. Price trades away. Open, low, high, close, open, low. This is where our turtle soup happened. This was the first turtle soup on the lower time frame. On the 5 minute, you're not going to see this as a turtle soup, but on the 5 minute, you will see it as a return to an order block. You will see it as a return to this inverse fair value gap right here, right? Again, we're not particularly too caught up with what PD array we're trying to enter off of. We just want to see, are these PD arrays present in the direction that we're expecting price to continue, right? So now on the lower time frame, when we're looking at price continue away, you guys have seen price. You guys have seen, if you're not new to this, if you're not particularly new to this, you guys have seen when price just goes and goes and goes, and you guys have seen when price is not offering many pullbacks. You guys should know what it looks like at this point. If you've been spending 2, 3, 4 years into this, you've seen price just go and go and go. I want you to really pay attention and pay attention to the times it's happening and what times it happens. I promise you, if you go look in your charts and look between Q2 and Q3 of every session, you guys will see that these tend to be the best sessions to trade. This might not be a great example, but look at this one right here. Q2 expansion, Q3 continuation, Q2 reversal, Q3 continuation, Q4 continuation, Q3 expansion, Q3 reversal, Q4 accumulation, Q1 manipulation, Q2 fucking distribution higher, into a reversal. You'll fucking see it and you'll start to understand the narrative, okay? But again, in Q2, we're expecting this to be a time that if price is going to go ahead and go, it's going to go ahead and go. We're not looking for too much work on the downside. So we see this turtle soup here. Boom. We're expecting this to be one of those times where price is going to go ahead and go. It starts to do that. Boom. We love that. Right? We got that 5-minute fucking fair value gap right there. On the lower time frame, we don't even trade into it. At that point, I've already dropped down to the 3-minute, and this was the one I'm looking at. I want to see change in say a delivery right above these down close candles. Boom. We trade right into it right there. That's where I'm entering. Right on this change in say a delivery. Turtle soup on the lower time frame. Boom. Entering. Bing, bing, bing. I'm in there. Price is going. Price expands. Price doesn't offer much of a pullback. There are certain times when price is not going to offer much of a pullback. And it may not be every fucking day, but certain days, it'll be there. The Sunday open tends to be a day where you might be able to catch this. And that's one thing that I know, right? So, Sunday open, I'm looking for where is price likely to go, right? We haven't traded above the opening price of Sunday yet. So that's the first place I want to see it go after we've already opened, traded lower. Now I want to see us go put in some highs, right? As we can see, if the Asia session were to end now, what would we have? Open, low, high, close. Low pullback into the close. Makes sense? Makes sense? I really hope it fucking makes sense. I really hope that makes sense. If you have comments, I've got to end this a different way. All right, so that's going to be the end of this video, and that's pretty much how I'm trading and catching buy and or sell models, right? Now, there's a lot more I could probably go in further detail on, and I just don't know what you guys don't know. So in order for me to know what you guys don't know, you're going to have to drop comments, shoot me messages, and I'll try to answer everything as best I can. Again, this is what I'm looking for, and I'm finding consistent profitability with it, and it's probably the most consistent I've ever been in the 4 years I've been trading. Again, my name is Caleb. I've been a day trader for the last 4 years. Day trader, swing trader, scalper, whatever the fuck you want to call me. I trade ICT concepts, and I've got a little bit more of an understanding than the average guy. So, and I don't mean to say, I don't mean to say that to be cocky, but there's just a lot of people who are confused on these concepts, and I'm at a point where I'm reaching clarity in the sea of bullshit. I'm one of the guys that's going to try to teach you in clarity and in detail, because there's a lot of fucking bullshit out there, and I don't want you guys to be wasting your fucking time on the bullshit. Fuck, I don't want to waste my time on the bullshit. If there's someone out there that's watching this video and is like, hey, he missed this, fucking leave that shit in the comments. I read all the fucking comments. This is how I improve, because I take criticism, I take feedback, I look for new ways to improve. That's what a community is. That's what a community is. So if you enjoyed this video, fucking, hey, maybe subscribe, maybe not. I don't really give a shit. I'm going to continue doing me. You can leave a comment if you have any comments. And yeah, follow me on X. My socials are all right here. Bing, 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 bing. All my socials right there, I guess. Whatever. I don't really give a shit. Maybe they're right here. Maybe they're right there. I'll throw them up on the motherfucking screen. You guys can follow me or not. I don't give a shit. But let's build a community. Let's continue to get better. And yeah, maybe there's something I missed. Maybe there's something you guys want to add. So go ahead and comment that shit. We'll see you guys in the next video. Peace, bitch. Whew.